Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer at Wealth Shield, an outsourced CIO and investment research company, and Evan Cohen, Founder and Chief Operating Officer of WithVincent.com. It's a media company focused on alternative investments. Fellas, TikTok. Last week, get your TikToks out, get them posted, right? So, all right, here's the deal. This company, I think this company, TikTok USA is worth $100 billion. It looks like the company is going to shut it down. So that's the buzz that I'm reading out in the press. What I wanted to talk about with you guys. So TikTok's owned by ByteDance. I should say this. ByteDance is like the second largest pre-IPO stock in the world. Okay. So what are just maybe one or two other thoughts? So ByteDance is estimated to do $150 billion in 2024 revenue. TikTok US is 10 billion of the 150. So it's like 6.7%. So it's not that big, TikTok USA, compared to everything else they got going on, right? The ByteDance has a $247 billion secondary market valuation. So it's a 1.6x revenue multiple or price to sales. Meta, as comparison, is at 10.3. Okay. Undervalued. I think if you take that $10 billion and you applied the Meta price to sales, so if like TikTok becomes a U.S. company, I think you could probably, I don't know if it's 10.3, but it's something higher than 1.6. I'll tell you that much, right? So it's probably like a $50 to $100 billion company, right? So here's the thing. Here's my question to you guys. What do you think is going to happen here? Because there's a lot of people that use TikTok, right? The Chinese government's involved. Like ByteDance is obviously involved. You got Trump administration coming in. Like Clint, what are your thoughts, man? Like, what do you think is going to happen?
I mean, I was thinking originally they'd sell it off, right? It'd be a very attractive asset for someone in the U.S. to acquire just based on the revenue, all the different ancillary revenue sources that would come from, so the existing revenue, then all the ancillary revenue sources that would come from it. If you could get it into a U.S. domiciled entity and then gradually rebrand. I originally thought that would be the play. Remember, there was Mnuchin was talking about it. His group was talking about acquiring the business. So I thought that was going to be the trajectory, and it still may be. But if it shuts it down, I think ultimately that just paves the way for Google or Alphabet to capitalize using YouTube and the shorts that they are doing primarily. You're going to see a transition. People will adapt. But I originally thought they'd sell it. Right.
Evan, what do you think, man? What's your take?
I mean, it's just a very bizarre scenario. I agree with your analysis on the valuation. I also agree with Clint that I thought that it was going to be it's an asset that definitely someone wants to acquire, and there has been no shortage of people that wanted to purchase it. I believe Larry Ellison tried to buy it. I believe Steve Mnuchin was in a deal. Kevin O'Leary was rumored to be trying to get a deal done over the weekend. But the news just seems that like the CCP doesn't seem to have any interest in selling it. They're perfectly happy to write off the money. And as you said, it's like it's a nominal amount of percentage of the company's overall revenue. So there's a world where, it shuts down in the United States and the valuation in the private market goes up because you don't have this overhang of political risk. The company's generating, hundreds of millions of dollars in revenue. So it's just very interesting. If you're trying to play it, I think there's certainly an element to what Clint was saying about trying to buy Meta and Google and all the competitors, where I don't think there's any shortage of demand of where customers are going to go. They're going to try to check out Snapchat and other platforms to try to get that return of ad spend. But it's just very bizarre all around. And I can't think of another scenario where that much money evaporated so quickly. That value just gone. But yeah.
I mean, look, the CCP thing is the big wild card here. Because I think if it was ByteDance just as an executive team, they'd be like, okay, this is not what we want to do, but I'm not going to torch a $50 billion asset, perceived $50 billion asset. So I guess I'll sell it. You know what I mean? So let's go sell it. But China's different than the United States, right? And, so the CCP, if they don't want them to sell it, I don't think they're going to sell it, and they will just shut it down, and they'll just eat it. So, and I think, Evan, to your point, since it's such a small piece of their revenue, it's not like the CCP is going to be like, well, we're going to deep six the whole company. Like ByteDance will still continue on just fine, right?
Yeah.
Without TikTok US.
Arguably better.
Yeah, maybe some of the overhang comes off the valuation multiple, right? I mean, you're not wrong about that. I just, it's very interesting. I will say this though, I am like laser focused on this because if this does pop out, you know, there's going to be a massive secondary market race on whoever goes out to buy this thing, right? Like if it comes out and it's like, $25 billion or $30 billion, they end up selling it because whoever's going to buy it's going to buy it on a song. That's going to be a huge valuation, like within the first year or two. Those are going to be a huge unlock in valuation. So this is like, if it does go out, like they're going to be and it's going to be like what Musk did when he bought Twitter, when he bought X, right? Like he's going to they'll borrow money, they'll raise money in the capital markets, there'll be big institutionals and then there's going to be a lot of opportunity for like, other funds to come in and participate too, right?
The interesting thing I'm trying to understand is that there have been a number of different people who have publicly said that there are groups trying to acquire it, which makes me believe that there's someone on the other side listening to offers.
Right.
But it also feels like everyone's listening to these offers. But if there's no intention to actually sell it, then what's the point?
Well, it's like going to be Trump. It's going to be a Trump Xi Jinping special. That's what it. I mean, that's like. I think this is all politics. This has nothing to do with business. Yeah, like I think this True Social buys it would be wild. But but this is like it's all politics. Like that's why I don't think anyone can really know what's going to happen because Donald Trump will get in office and he's going to call Xi Jinping. They'll have a conversation and they'll either work something out or not work something out. Like I think that's what's going to ultimately happen, right? And frankly, like Trump might be picking who's going to get it, which of these people that want to buy, who's going to get it, right? So there's some of that too.
It's wild. I mean? It's just a wild scenario in my opinion.
This company would be like a top 10 pre-IPO stock company. Like if it comes out and it ends up, I think in time, this will be a $100 billion business. I don't know how, and devil's in the details on how all that stuff works out, but it seems like the advertisers aren't going anywhere. So if a new group buys this and the revenue continues, like this could be a $100 billion business, $75 billion business. That's a top 10 US pre-IPO stock. Like that's a material thing. So,
do you have any national security concerns?
I just operate under the assumption that the U.S. government's looking at everything I do, and every other government is looking at everything I do on the internet. So I've always been that way.
Yeah,
so
same way.
Okay, cool.
National security. It's like since the internet started, I've been sharing my stuff with all these governments, right? So, I don't know. That's my take on it, but obviously
makes
Congress
sense. I think you're right.
It was a problem.
Yeah, I mean, clearly, but now Mark's going on Joe Rogan, and he's got his whole agenda too. So it's just social's got there's definitely some influential people in social that have been changing their stances on things, and between TikTok, between X, between Zuck, I don't even know what's going. Even Google's got a little bit of attitude. Yeah, Bezos for sure, man. It's all crazy. Yeah. It's quite interesting. It's a good time. It's a very interesting time.
The winds have changed.
Watching this
it's
market.
Time to change, right? Yeah, it's so funny. So funny.
Hey, go with
Clint,
the flow.
You got
trend followers at heart.
Yeah, they really are. So, Clint, I know you got to scoot in 10 minutes, but let's do this third topic next. So, xAI, okay?
Yeah.
So, first of all, xAI just launched an app. So, there's like an xAI Grok, like a Grok app now, right? Which is interesting. So, I want to talk about that. But also, too, man, this thing has an $83 billion valuation now, okay? It went out in like the last round. It's up 67% since the last round. That happened in November, the last round. So it's been, 2 months? It's up 67% in the secondary market. This thing's a rocket ship. No pun intended.
Yeah,
right? Because it's a Musk company. But
nice
this
pun.
thing is a rocket ship. Like this thing's going to go to 150 like OpenAI, I feel like fast, right? So like Clint, thoughts on Grok, like maybe having its own app now? Does that change like the revenue dynamic? You think that's direct to consumer? Do you think they'll start to ramp that up more than just kind of getting a share of the X subscription revenue?
Yeah, I mean, I think they'll
revenue.
Yeah, I don't. I use it straight from the X platform, but I get why they'd want to have a separate app. So it's a more direct user experience. But I'm starting to play with it a lot more. I think they've got a rich data set. They sure have been moving fast in terms of catching up to capabilities. I feel like their image creation capabilities are way up there. But I don't know, is this going to be just an app for meme creation and X post, or is it going to be more profound in terms of what you can do on these other platforms in terms of, it's incredible what you can do on ChatGPT and even on Claude. So look, I think there's room here for competition. I've always been kind of a bull on this just due to the fact that there's a rich data set to train from.
Right. The X data. That's what you're referring to.
Yeah, X data, the ability to really capitalize on what that platform is, whether it be from a news perspective. There's a lot of organization that AI can help bring to the X platform to enhance the user experience to the platform. And I think that data is going to also help xAI become more efficient at doing that. But I don't know. I'm not a bull if it's just going out there to compete with ChatGPT, for instance. I think it's got to differentiate itself. And I don't know how they're going to do that yet. I don't think anyone really has a clear view on what these business models are going to look like in terms of the LLMs. But I definitely think it's got upside. Right.
I mean, Evan, what do you think? Do you think like the driver of the secondary market valuation is like the app and the next 100,000 GPUs that they're going to buy? I mean, what do you think is driving this?
I think it's both those things. Okay. I mean, one, the GPU clusters that they've built and the way that Jensen talks about the way that they've innovated on the hardware side has certainly it's fueled that bull case. Right. Jensen talks about Elon, like he's like, look, there's AI entrepreneurs and then there's Elon. And he's just like, what they're doing there is like things that if NVIDIA is saying that we didn't think it was possible and they did it, that's like pretty amazing. And I'll put it here that I was the person on this podcast that was not a bull on this. So I was like, this seems like kind of ridiculous, but now I definitely have changed my tune on it. I did say, and I will go back to this, is what I think is so interesting is that their business model is just a little bit different. Like the $8 a month subscription will cannibalize ChatGPT Pro. And I think that's like ChatGPT is trying to go premium, upscale. They're like upmarket, $200 a month. That premium $20 subscription compared to Grok 2 is totally negligible at this stage. Right. Like it doesn't really make, like I personally, I've said this before, like I use Claude personally for work as my primary model. And then I use ChatGPT personally just for, like ChatGPT Pro personally for, random tasks and things like that and throwing a little bit of perplexity there. But over the weekend, I downloaded that Grok app and I started using it. I'm like, yeah, this is basically the same as ChatGPT Pro, but I already pay for it with my X subscription. Like going to save myself $20 a month. Like don't need ChatGPT anymore. And I just see it cannibalizing that consumer market very, very clearly. I think that their distribution model of bundling it with X and bundling it with other tools, bundling it with potentially Starlink, bundling it with Tesla subscriptions, with the Cybertruck. That's again, like it's just like that. You can't compete in that distribution model. And I think it's really, really interesting. And all of that I think is fueling that $83 billion justified valuation.
Right. Yeah. I mean, this is I'm like very bullish on xAI.
And real time. You got to remember, real time is a really important thing, especially for users.
Talk about that. Yeah.
Well, I mean, if you're using it, like let's say I'm using it, and I used it over the weekend, where I put in a bunch of kind of notes that I look at from a market perspective. I just put them all in there, and I said, draft me a memo that I can circulate to the team for our call on Monday, and it was like perfect. It was like, here are the key trends. Here's what I'm looking at. Here's what happened in the news over the week that was pertinent to what I was talking about. I mean, it was pretty great. Whereas if I did that to ChatGPT, that just summarized my notes and send it out, there would be no kind of current event grab. And then the same thing on Google, because I use Google Docs a lot. Like I did a little test. I just had, hey, help me draft these notes up. It was terrible. It was so dated. It was ridiculous. Like horrible data. Like they were like, oh, the 10 years at 3.88%. I was like, that's unusable. But but just seeing that real time, the way it worked in conjunction with the news that it has. I mean, it has all that data, right? The news clips are all on there. So it is in a profound way for me to use it is to be able to have these summaries and then send those out to the team or send those out to clients, et cetera.
Like the news, like it's not even just current news. It's like when things literally break on
Twitter
X.
Or X.
It's crazy, right? Like it's not even on CNBC or any Bloomberg anyway. It's like it's on X first. It's like it is wild, right?
Yep.
So listen, I like this company for 3 reasons, right? Like there's 3 let me say it differently. There's 3 catalysts that are going to happen, I think, for the valuation of this company, right? One, this app xAI app coming out. I think that's huge. Okay. They're training Grok 3, the next model. That's supposed to come out in the first half of this year, right? And then they're going to have this another 100,000 GPU cluster that they just did this capital raise for. They're going to buy those GPUs and then probably move a mountain again and get those all up and running, before June of this year, and then be training Grok 4 on 200,000 GPUs, which is like I think that's double or triple the size that anyone else has ever trained a model on before, right? And there's pre-training and post-training and all this other stuff. So like, there's a whole bunch of different ways to optimize model and train a model, but this is the first time, I think, as far as I understand, that this size of a cluster will be used to train a model. So that will be interesting to see what kind of, but probably to drive it home, Grok 3, Grok 4, the app. And then to your point, Clint, I think everyone's going to start to wake up that like this access to real-time data is material. Like I'm noticing it. I'm doing like ChatGPT and xAI queries, and the xAI data, just like you said, Clint, I'm seeing it too, man. It's very good. And I'm not just seeing that on like market data stuff, related stuff. I'm seeing it on like regulatory questions. I'm seeing it's like very interesting. Because you'll get people going on X and they'll write like a thread about like a very detailed, nuanced thing, right? That I don't know of any other social media platform or places that are talking in that level of detail from experts in the field, right? In that particular field.
LinkedIn.
It's really, really intriguing, So I don't know.
Yeah.
Like I'm bullish. I think this thing's going to be at 150. That's my point. I think Grok 3 comes out this summer. I think people get all excited about that. And I think by the time December hits, this thing's going to be like in the 150 range.
It's interesting you say that, though, because I feel like I'm hearing a lot of people say OpenAI at 150 feels very expensive now.
Well, I think it does when you got Grok at 83.
Well, so which one's right? Is OpenAI expensive at 150 or is Grok cheap at 83? I think
everything's relative. This is like a market dynamic thing. Like that's what I think. Like OpenAI at 150 was not expensive when it was the only game in town. Now all of a sudden you got, you know what I mean?
Well, they've had a lot of issues too from a governance perspective, and change. There's been a lot of change there that's caused people to sour up on it. I still think OpenAI is going to be legitimate because I think they're going to pivot to a fully enterprise model. It just makes too much sense with Microsoft behind the scenes to be the B2B go-to enterprise solution.
You're right.
I think that ultimately is what ends up happening there. But guys, I got to sign off.
Okay.
Thanks so much. Sorry for the quick one.
No problem.
Later, Clint. Cool, man.
Yeah. So let's hit this last topic here. Or any parting thoughts on xAI? Maybe I'll just do that.
Well, I think my thoughts are going to kind of flow into this next topic.
Okay. So Anthropic just announced they're doing $60 billion round, right? They're doing $2 billion raise. Lightspeed's going to lead. That's like, this is basically like tripling the valuation from the last round, right? The last public round. The last public round. That's right. Yeah. But the secondary market has it at like $35 billion valuation right now. So it's already up like 100%, 95% from that January round, the last public round. So are you referring to that
the Amazon round?
Yeah, the convertible note.
Yeah. So let's talk about that just briefly.
Good.
Well, I mean, sorry. Anyway, so so they last raised publicly in January, and then there was underground news that they were going to raise again in like October of last year, and it was going to be somewhere around 40 billion, maybe like 42. And people were trying to get allocations of that. I know you and I talked about it. There were lots of deals going around. And then I guess in November it became, or maybe even early in December, it came out that Amazon was buying the whole thing. No one else was going to get an allocation. Amazon bought in. It was a convertible note. It was at 44, if I'm correct.
I think that sounds right to me. Yeah.
Yeah. And so that was like not even a month ago.
Right.
And now they're announcing the $60 billion Lightspeed round. So that note will be immediately marked up, and they'll get that note at a little bit of dilution, and now people are getting invested at 60. So,
right.
I mean, so there's two ways to think about this, right? Yes, the valuation is effectively well more than doubled, almost tripled since their last public round in January, although they did do a financing in November where the market was so hot that literally Amazon took the entire round and no investors could get in. So they had all this preemptive demand, and now they're like, oh, I was going to invest at 44, and now it's like, oh, now you're at 60. Good luck.
Right.
And I think still there's going to be no shortage of people that want to invest in this company at 60. It's my opinion.
Yeah. So we might have talked about this offline, but it's going to be interesting. I mean, OpenAI's got $5 billion in revenue now, right? Anthropic, I think, is trending towards $1 billion, right? I think they're like 875 million run rate, if I remember that correctly.
It's something like that, yeah.
Yeah, xAI. I mean, I'm sure they're getting some kind of revenue from their X partnership, right? When they're delivering the model to there and getting some portion of that like annual fee, but that can't be much. You know what I mean?
Yeah, I agree.
So, I mean, I guess and I had seen some reports that maybe they were sneaking up to close to 100 million, but like at some point, you would think, right? I mean, OpenAI was like at the $100 billion mark. They kind of floated around 96 billion for a while, right? Without the revenue. And then naturally the revenue kind of caught up a little bit. And now, I mean, they're still at like a 30 times revenue multiple, but at least that's within sniffing distance of a more normal kind of 20x multiple, right? But, Anthropic is not there yet, and xAI is not there yet. So it's like at some point you wonder how long, like especially in Anthropic, because they've been around now a couple of years, right?
Yes.
How many more years are they going to get, or quarters are they going to get? Until people are going to be like, oof, the revenue's not keeping pace with the valuation increases here. You know what I mean?
Yeah, I mean, so a couple of interesting things. One, while ChatGPT has that substantial revenue growth, a lot of it is on the consumer side, which I don't believe is very durable. They definitely have a meaningful enterprise growing pipeline. So I'm not saying that they're not on the enterprise side. Claude also has the direct-to-consumer model, and they are doing a big marketing play. I don't know if they have like billboards in Times Square. They're all over the place. They're trying to do some direct-to-consumer marketing, but I don't think they've like unloaded the enterprise sales engine yet. So, and I do still think it's incredibly early. The thing that I'm most interested about Anthropic and why I was interested in trying to get some allocation for it, non-investment advice here, is that I just find that the people that use it, and I know Clint has said he's using it, I use it, Nick uses it, we find the responses much better and differentiated. I find Perplexity and ChatGPT and even Grok, it's kind of like, table stakes good, and at the same time, it's a little bit commoditized. I find Claude's responses and Claude's ability to think and write substantially differentiated and frankly better for a lot of the things I use for work. Non-calculation work, because I don't do a lot of like math. And so yeah, I think that there's a lot of opportunity there. I still think that the valuation is somewhat it's still expensive, but it's underappreciated relative to what the technology opportunity is. And I believe that the ramp of adoption from enterprises is just getting started. And if you're an enterprise and you're going to be doing, I think you've mentioned this before, the concept of this like this LLM router, where depending on what the input is, a certain LLM will provide that response. I feel like that seems to be well understood and probably the likely way that all these models work. I feel like in that world where there's a router, if Claude really has a really nice differentiated play, then it could be a really great way to just earn revenue and build a business that's very durable and very differentiated. And so I find that very interesting.
Yeah. It's interesting to hear you talk about, even the previous conversation where you're talking about xAI and they're kind of like real-time data. I mean, I think people are starting to have opinions about which one they prefer.
Yes.
Right. So like, as we get to like, which to me is really intriguing because that's more of a feeling, I suppose. I mean, I'm sure you could probably come up with some kind of like scientific test to assess for your own particular needs if one is actually better than the other. Right. But that's more of like a UI. I mean, it kind of whiffs of like a user experience kind of thing, right? Like I just prefer the answers from this model better than that model. I feel that the answers here are better than the answers there, which is cool because that's what makes a market, right? That means that when I hear things like that, to me, in my mind, that means that all of these things can exist all at the same time. Right.
I don't disagree at all, but I do wonder if there's like a no man's land commoditized play, and then there's like a really differentiated play. And so for me, like Clint and I talked about this just a second ago in the last segment, which is like, sometimes you use Google's Gemini and the answers are terrible. Like it's just not good. So I do think there's like not good, and then there's good, and then there's really good. But like I do believe that ChatGPT Pro even is constrained on the output. Like they limit the number of characters that you can pull out of it. So if you're trying to write a really nice document, or you're trying to do some like really thoughtful analysis, while you don't run into the rate limit, the responses they feel very cut and short. And I feel like in Claude, whenever I use it, I feel like the explanations are much longer and they're more detailed and they're more substantive. And so again, you're right. I feel like there are different use cases for different models, and people will start leaning on different models for different things. But I believe the commoditized one is probably the generic one, which is like, like if Grok is, if ChatGPT is the model where it's fast, the responses are very good, but they're kind of succinct, and you're kind of using it for everyday things like, hey, build me a recipe for apple pie. Like, I feel like Grok can maybe own that market because it has the real-time data, and ChatGPT doesn't have like a defensible mode on that. And then if Claude is really owning the like, hey, we can digest your 700 pages of like documents and compliance rules and et cetera, and we can build you a really nice model for there and give you long outputs, they're going to have that there. And then it begs the question, like, then where does ChatGPT live? Like, what's their sweet spot? And, you know, maybe Perplexity somewhere in there as well. And so I don't know. I think that we need to start seeing some of these models carve out their markets and what they're good at, their niches, and then they can build there. And I think specifically around medical and legal, because I feel like those are the two areas where like the businesses are so logic driven. Like there's a rule, there's a way to think about it. And like, I feel like Claude is really good at that analysis. And I wonder if the other models can catch up there.
Yeah. I mean, that's like well said. The one thing that I saw this week too, that's interesting, would love to get your thought on it. I saw a lot of chatter around how large language models just continue to like encroach on what I would call like apps, like AI apps. So it's like an ever expanding thing. So like I saw some developers writing about, you know, like they were showing like size of boxes. Like, you know, you have like the database, then you have like the large language model box is huge. And then you have like the AI, like the UI, right? It's like really tiny and small, where that's like, you know, I think prior there was like this middle layer infrastructure, which I don't want to deminimize what the large language models are as middle layer, but like there was this middle layer infrastructure, but then the apps were like really big and sophisticated, right? And this is kind of like turning that on its head a little bit. So, I mean, to your point too, around finding a niche, like if people start to dial in, like if OpenAI is going to be like the legal financial services solution, right? And they're going to really dial in on like solving niche use cases in those particular industries, right? Or use cases. And Anthropic does something else, and xAI does something else, like more science related or something, right? Like that's where like there could be some differentiation here too. But so, I mean, have you, maybe I should stop there, ask you the question. Have you heard of any developers talking about how this is like, these things are starting to move down the app side of things, the large language models?
Yeah. And yes, I have for sure. I feel like the things that developers and entrepreneurs who want to build AI applications or AI adjacent applications, the thing they're trying to figure out is how to train these models on their specific use cases. And I believe that and I'm not like deep in the code on any of this, but my understanding is that OpenAI's API kit and software is actually quite good for training and building your own complex models there. But there's a limit on the output again. And so it really depends on what the app you're trying to build is. But I agree with you that the entrepreneur, like somehow winning that entrepreneur market of getting people to build these agent apps. I think we talked about it like 2 weeks ago, like 2025 is supposed to be the year of agents. Like everyone's talking about agents.
Right.
Whoever can build that software development kit, that SDK, and really own the app ecosystem is going to win probably.
Yeah. And that to me, though, I got to tell you, Evan, that point is very smart, because I think we've seen that historically, like wherever the developers go, that's who wins the business. So and there's a lot of things that go into that. It doesn't always just have to be about model preference or anything else. It's like they got the best SDKs, they got the best APIs, they're the easiest to work with. They like let you do X, Y, and Z. There's like support for the developers. Like that stuff really matters. You know what I mean?
Well, let me put it this way. if you were to talk to any entrepreneur and say, hey, or like if you were to pull 100 entrepreneurs who build software applications and say, what database is your app built on? I would say the majority of them would say AWS. And who's leading the investment into Anthropic? And so if you are supporting the app ecosystem and the software developers, and you're trying to have the direct integration into the databases where that data will be pulling into your AI application to provide services to your users.
Dialed in. Yeah, it's smart.
It's right there.
It's a good point. It's a good point. I mean, that like this, I think some of these answers are going to be literally that simple. It's like, you know, this LLM platform has the best developer community and they're all tied in with their cloud provider. And they stitched these things together and just made it very simple and easy, made developers' lives easy like that, like they're going to win. And I also think as well, like to your point around routing to different models, like I think a lot of this stuff, probably most queries, right? Especially when these agents hit the scene, can be tackled by a less sophisticated model. Right?
Sure.
So now you're kind of getting to a point. It's like, look, I like this large language models, API suite, their developer community, their tie-in with my cloud provider, like all of these things. Sure, like, you know, maybe their like best model isn't as good as this other guy's, but all their other models are the same and it's the same price. And like all things being equal, like I'm just going to keep using these guys.
Yeah.
Done, you know? So
it's very fascinating. I guess when with the new administration coming in, let me ask you this question. New administration is coming in and there's a lot of momentum around M&A being unlocked.
Right. Yeah.
What does the next 4 years look like if you are a foundational LLM provider?
Well, I will say this. I think, like we talked about the other day, I think Apple needs a solution. They got more money than they know what to do with, so they could start buying people. Like Apple
Amazon
could buy I don't know how much cash they have, but they could probably buy somebody for $100 billion, no problem.
Yeah, I think they have like $300 billion in cash.
Yeah, so I mean, not to say that they'd spend $100 billion on somebody, but they could write a huge check, especially
Certainly.
for something like this. And I don't think anyone would really like it. Actually, would probably the stock price would go up. Apple stock price would go up, right? So
I would agree.
You know, so like I think if M&A comes back on the table, you got a lot of these like, you know, Mag 7 type players that would, you know, could easily start to take down some of these labs. Also, too, there's a lot of smaller labs that are doing more super sophisticated type work that aren't really in kind of the mainstream. That those could get gobbled up fast, and those would almost be like acqui-hire kind of things. You know what I mean? You're like buying the talent, really. But you know that could be something that we see too. So, yeah, I think M&A is definitely going to start to play a role in this AI landscape. What do you think?
Well, I agree with you on all of that. I think when I look at the valuations of these AI companies, and they're eye-poppingly large, and obviously the revenue is trailing by a lot, and there's big multiples. I do look at this and I'm like, all right, like this is a really expensive acquisition. This is a really expensive company. Obviously, there's a big opportunity here, but there needs to be an exit window that I believe in. And so I'm much more interested in a company like Anthropic. Just building my case and my thesis around this specific company is that, look, Amazon just bought a big chunk of them. They don't have an AI solution. They've got tens of millions of Alexa devices out there and a massive business in search and sales. So they certainly could, and have AWS. And look, if it goes really well and the product continues to build and they gain more customers, they gain more traction, it seems like an obvious, AWS is just going to, they probably have a call option in there to buy the whole thing. Yeah. I look at almost like the smaller valuations are more appealing to me to some extent. Sure. Like, because I feel like there's an option for an exit. I mean, outside of the secondary markets, right. I think OpenAI is very expensive. Now, it's obviously not very expensive compared to Microsoft's market cap, but like Microsoft, it's also very expensive. And you know, how much of it is commoditized? I think xAI, they're never going to, no one will ever buy them. Like Elon doesn't need any more money. And like, they've got unlimited like distribution and all the integrations with all Elon's other companies. So I don't know where the liquidity will be on that. And Elon has not shown a perplexity to keep companies public. So like that'll just trade on the secondary markets probably for a long time. And it's so, okay, so what other options do you have? Perplexity, you've got, Anthropic, you've got a couple other players here there you can buy. And if you want to get in on the foundational buying one of those companies, and Anthropic is just a great one. And I love the product. So
yeah,
it's for all those reasons I'm interested in it, even at 60. None of this
Right.
is an investment advice, but like, I think it's just a really great company, and there's a lot of opportunities for liquidity and growth.
Right. So the one thing that I'll probably bring up on this, because this is this dynamic that's and it happened at OpenAI, and I don't think anyone really fully appreciated the human aspect of what happened at OpenAI with their employees. But those people made so much money, right? And they had this big exodus after they did all these tender rounds and everything. And like, I think a lot of people focused on what was going on at the company. I just think that they just minted a couple billionaires and a couple, folks that were worth well over $100 million. And they're like, why am I reporting to this guy? Like, I'm out of here. Like, you know what I mean? I'm worth $100 million. I'm worth $1 billion. Like, what am I doing? Like, I'm going to go do my own thing.
Absolutely.
Right? So like to the M&A point, if you get someone come in and buys Anthropic for $90 billion, and Apple does, right? Like, you got to figure out how you're going to hold on to all those employees, because some of those people are going to get, if that's like Apple stock, even whatever the kind of, vesting period is, post transaction or blackout window, or however they structure that thing. I mean, you're going to get a huge chunk of those employees are going to be gone, because they're going to be worth $100 million, $250 million. That's like walkaway money. You know what I mean?
Well, that's why I think you have these notes. That's why I think Amazon invested and Microsoft invested instead of acquiring for that exact purpose. And so, you're right. That's a big risk that people have to calculate on. And it's certainly concerning. But
also too, man, it's a huge opportunity, because I think you keep your eye on those people leaving those places, because now, I mean, it opens up an interesting dynamic, because they're young people. Most of these people are young people. They're like south of 50, right? South of 40. So like
south of 20.
But sure. You know what I mean? So like, now what? So like, you're 40 years old. You got $100 million after tax, sitting in your bank account. Like, what are you going to do with yourself? You probably take a year or two and just, bum around, travel the world. I don't know. But then you come back and you're like ready to do something else. I mean, that's awesome. I think that's awesome for our economy, because you're going to have a lot of really smart people now that are going to be effectively super well capitalized with their own money, right? And they're very smart, and they're going to be able to go out and build some incredible companies and businesses around that. So
I hope so.
Bodes well. I think that bodes well for technology over the next 10 to 20 years, right? If these guys can start to get liquid.
I absolutely agree. I think that the democratization of wealth into some of these really smart people is a good thing.
Yeah. So I'm pumped for that. But look, I'm bullish on this whole space, and I actually love how it's kind of playing out. I'm still not ready for AI apps though.
It just wait till you have the use case that matters to you, and it'll work pretty well.
Well, I will say this. I'm starting to coalesce around the concept that the AI app industry will be multiples of the AI platform industry. Okay. So those could be agents, those could be whatever, but like however that like plays itself out is going to be multiples the size of these AI platforms, right?
Interesting. Maybe.
So I'm starting to form. I haven't fully dove in on that, but I'm starting to formulate thoughts around that. So if that is in fact the case, I'm like dying for this stuff to, kind of like the sandbox to get drawn up a little bit here, because the amount of these AI app companies that come out there's going to be so many opportunities to invest in businesses, right? And I'm dying to see those pull through.
Yeah, I agree in a lot of senses. I wonder though, because I think there's a lot of people that think that. I don't think that's a non-consensus bet. I do wonder though, like when you think of like, okay, what's more valuable? The top app in the App Store or the App Store itself?
Sure.
Like,
fair point.
I think, or like what's more valuable? Like the business that's built on AWS or AWS. And sure, there's probably a couple of unicorns and it scales, but at the same time, the foundational platforms do have a lot of value, and it's very locked, and there's really good moats. And so I don't know. I think that the one thing that's unique about the AI ecosystem compared to the app ecosystem that exists today, or the software system, the ecosystems that exist today, is that it does create an opportunity for a lot of commoditization. because the agents
Right.
obfuscate a lot of the value. Like, hey, like, do you really need to build an app that makes reservations for you? Or can I have a bot that does reservations and cooks and picks up my laundry and all these other things? And so I wonder, like, we're going from a world where you have an app to perform a function or handle a service or provide you a service to having an app that does the service and does the work for you. And it's just very different. And so I wonder if it's, is it the app ecosystem that we want, or is it the model just does everything for you and you don't even worry about it and you don't really care. So I don't know. There's a lot to think about there in like the grand scheme of things. So when you invest, when I think about investing in AI apps, I always wonder, it's like, well, someone pitched me like, hey, I'm going to build a TurboTax, but AI for you. I'm like, cool, that's great. Like, that's a cool business. Like, there's a lot, like, every American needs to do their taxes. It makes total sense. But like, what's stopping someone else from building that too? And like, what's your go-to-market? And then what's your price model? And then like, how do you win and differentiate? And I'm like, it's hard for me to grok the like all the way big vision, but that's the world we live in.
Yeah. I mean, the same thing, people have been talking about that for financial advisors too, right? And it's
absolutely
like, how do you provide financial advice for everybody in a really, really robust way, not just like kind of wealthier people. So doctors, I've heard people talk about that for medicine, right? Medical services.
My thinking, and I think I said this a long time ago on this podcast, is I still believe that there needs to be a new business model, which is how like Google reinvented the information model by creating an advertising adjacent business on top of it. And that is really what allowed that to explode.
Right.
There was Encarta Encyclopedia before that. And like, then there was like Google. I think that whoever can crack the AI service model with some sort of with some sort of payment business or revenue model that isn't tied to subscription, I think that you will unlock a much bigger play, whether that's data sales, whether that's advertising, whether that's proof of work or proof of something. I don't know. There's a million ways it could go.
Yeah.
But that's where I think the unlock is, because at the end of the day, people want the service done and they'll probably pay the least for it. I don't think there's as much brand loyalty in AI, because at the end of the day, it's a commoditized knowledge base. And so, like, I think that's where it kind of all comes down to zero. And how do you make money in that world is the creative element of entrepreneurship.
Yeah. Yeah. Listen, this definitely hasn't firmed itself out yet. I mean, I'm starting to see the AI infrastructure has started to firm itself out. Right.
Mm-hmm.
And I think we're starting to see shades of that in AI platforms, but we're nowhere near where we need to be in the AI app space. And I think that AI apps, I still think that AI apps is going to be robust.
Costco for AI apps. That's what I want.
Listen, I'm telling you, it's going to be big.
Totally.
Like 10 years from now, we'll be talking about all the apps.
Yeah.
And we'll be talking about Anthropic and OpenAI and xAI, like we talk about AWS and Google Cloud. It's like, oh yeah, the large language model providers. Like,
Yep.
Yeah, like they got X, they got Y, they got Z, like, and they'll all be competing against each other, just like the current ones compete today. And it'll be a whiff of that. And then we'll be geeking out over all these like little niche apps that will be like super dialed into like a use case that I really care about, right? Or whatever. And there's going to be some big businesses there. I don't know if they'll be $100 billion businesses, but I could see them being $4 or $5 billion businesses, right?
Mm-hmm.
And those are fun to invest into. So, but
everything's for sure.
So, all right, brother, let's end it there, man. This is a good one. Thanks.
Great one.
2 weeks
I appreciate
in a row.
it.
I get in with you, man.
We'll start in 2025 off with the really good stuff.
Come on, man. We'll hope. I think next week we're supposed to have the whole crew back together again. So I'm looking
Let's go.
Yeah, man. I like it.
All right.
All right, brother. All right,
have a great week.
Talking to you.
Cheers.
You too. Cheers.